Hey traders, Nick from Vant Trading here, and I'm coming at you with an unprecedented and very interesting and unique video. Today we're going to be talking about some price action and some price manipulation that we saw occur today in GameStop, or GME, and the craziness that we've seen this stock do, as well as several other stocks. Some of the things that we have seen today have incensed me and several other traders. It has rocked the core fundamental trust in the stock market, and what has happened over the last couple of days could change and alter the stock market, how it operates, and could have lasting impacts for months or years to come in our financial system. Now, this is going to be a fun one. I'm going to try to keep this as short as possible. I want this to be informational. I want you to understand why GME and why a lot of these stocks just suddenly went supernova. Why did some of these go as crazy as they did? How did they do this? Could this happen again? And what was the unbelievable insider trading and market manipulation that we saw today? And what do we think the impact is going to be going forward for the average trader, the average investor, and just the market in general? Because this has been unbelievable. Now, if at any point you like what I'm saying or you kind of learned something new, drop a like. It'll make me feel good. I can pat myself on the back. Be sure to subscribe to our YouTube. We will talk about this every day at 1 p.m. Eastern on our Vant Rant podcast, and so you can get those alerts whenever we post a new video. Now, without further ado, let's get started, because GME here, look, even if you don't follow the markets and follow the stock market, if you went on Twitter, Facebook, even the news today, I'm sure you saw plenty of people who normally don't even talk about the stock market is probably all that they were referencing. A lot of people who weren't interested in the markets are now rallying cries for the average trader and the small-time trader. Why did that happen? Well, if you looked at GME and you saw some of the headlines, you probably saw that this was essentially one large short squeeze. What is a short squeeze? I want to give you a quick 1 minute, if that, crash course on what shorting is and what a short squeeze is and how this contributed to GME and a lot of these stocks going bananas that eventually led to the most unprecedented market manipulation we've ever seen. So, first of all, let's go through a little scenario here. Let's say you've got two market participants. You've got Bill and you've got Jane. Now, Bill thinks that GME, the stock, is overvalued. He thinks it's going to go down in stock price. How do you make money if that's going to happen? Yes, you can buy a stock and sell it higher, but what happens if the market goes down? You want to be able to make money on the way down. So let's say that Jane has a share of GME that she bought. It's currently trading at $10 a share, and Bill has $10 in a trading account. He's like, man, I would really like to find a way to bet and make money if GME goes down. So what he does is he goes to Jane and he says, Jane, I will pay you a shiny quarter if you let me borrow that share of GME. And so Jane's like, sure, just make sure you give it back to me. I'm going to have to sell it at some point. So Jane lends her share to Bill, and Bill pays her a quarter for it. What Bill then does is take that share, goes straight to Mr. Market, and says, hey, Mr. Market, this stock is currently trading at $10 a share. Here is one share. I would like $10, please. And so now that trading account that originally had $10 in it now has $20 in it. Great. Good job, Bill. You've got $20 in your trading account. But don't forget, he borrowed that share from Jane. So he needs to be able to give her that share back at some point. So what he's going to hope is that the stock price of GME is going to go down. And then he can go back to Mr. Market. Let's say the share price went from $10 a share to $5 a share. And he can say, hey, Mr. Market, I need a share of GME. Here's $5. And the market says, sure, here's your share of GME. And so now Bill has only paid $5 back for that share. He now has an account balance of $15. He can now give Jane her share back, and he gets to keep the difference, which in this case was $5. He just made a 50% gain on the stock going down. Now, that's all hunky-dory if the stock went down. What happens if the stock goes up? Let's say that instead the share of GME went from $10 a share to $20 a share. And Bill had to buy that share back to give it back to Jane. Now he goes to Mr. Market, says, I need a share of GME, and the market says $20. And Bill says, well, there's nothing I can do. I need to get that share back. So he has to buy it back for $20. He gives it back to Jane, and he's lost everything just because the stock went up. And so technically when you short, there is infinite risk. Now what happens if that stock went to $30 a share, $50 a share, or like we saw in GME, $500 a share? Well, a little bit of quick math there. His trading account where he originally had $10, if he held that, he now owed $30. He owed $490 just for that one measly share. He would get blown out, decimated. He'd owe all of this money, and then suddenly he's screwed. Now, that's not necessarily going to happen. Bill's not going to be able to hold that share and not buy it back because many times the brokers, the institutions, the trading accounts aren't going to let him just go in debt like that. They don't want to incur the risk of him not being able to return those shares to Jane and then they're on the hook. So they're going to force Bill to buy that stock back and return it to Jane before he runs out of money to help avoid their risk. So that's essentially what a short squeeze is, and what shorting is it's just simply, you're forcing these people who were betting and loaning shares that the stock was going to go down, you're forcing them to buy it back, to give back those shares they loaned. Otherwise, they're going to run out of money and they won't be able to return the shares they borrowed. Now, the market at its core is supply and demand. If there's way more demand than supply, the stock is going to skyrocket. It's going to go up. If there's more supply than demand, then obviously they're going to not be able to buy it for as high as they want, and the stock price will go down or will stagnate. Having this short squeeze and having these people have to buy back to return these shares is artificial demand in a sense. It's actually increasing the demand as now more people are buying. So this has only compounded the issue. And so look, people say that, a lot of people have strong opinions on shorting. Is it bad? It actually really helps the ebb and flow in the market and price discovery. And we'll talk about who was the core shorts that were getting squeezed out in GME in a moment. But first of all, let's talk about, how did this happen now? Let's talk about GME. How did this come about? Because it didn't just happen out of nowhere. It actually started to build, and it mostly built on subreddits and other kind of forums and marketing or communication platforms like Reddit, and a subreddit called Wall Street Bets. I've actually been a member of Wall Street Bets for a couple of years now. I just watch them kind of for the entertainment. It's just a group of normal average retail traders who, post their gains, their bets, their YOLO trades, and their wins and losses. And, lately in 2020, we saw a surge in retail trading because people got stimulus money. They opened up Robinhood trading accounts, which were really easy for the average person to now invest in the market. And people didn't have anything else to do. So we saw a surge in retail trading. And then going into the end of 2020, we saw some headlines start to hit GameStop. More specifically, around in September or in August, we saw RC Ventures, which is headed by Ryan Cohen. He's a co-founder of Chewy. Market loves Chewy. Everyone loves Chewy. The stock's doing very well. They bought a 9% stake in GameStop. Now, they have slowly increased that stake, I believe, to 12% along the way. But this is where we first saw kind of GameStop get that little pop, because it was just sitting at $2.57 a share. Because look, people are expecting GameStop to go out and die the way of Blockbuster. It's a brick and mortar video game company. No one goes there anymore. They all buy online. But we saw this pretty big investment there. And then in September 16th, we saw the pre-orders for new consoles give us a nice little spike. And this is where we started to see those forums and subreddits start to put in some YOLO trades and some speculative trades on GameStop. They just wanted those gains. They wanted to make 100% or 200%, whatever. Then we get into some of the higher octane news cycles. On October 8th, we saw a multi-year strategic partnership with Microsoft. Now, people are debating on what the contents of that are, but regardless, this brought more speculative attention to GameStop. And this caused the subreddits to even start churning out more, and people started discussing it more. And as this GameStop went from $4 to $13 to 12 to 14, people are like, well, shit, I now have FOMO. I want to take part in that. And we saw more people start to buy and more people start to hype it up. Then in January of this year, January 13th, we saw Ryan Cohen of RC Ventures was added to the board, along with two, I believe, of his fellow Chewy colleagues. Now, this has just skyrocketed. It brought all of this hype and attention in there. We saw volume down here surge as all of these traders, computers that were reading the headline and algos and all sorts of people buy the stock and squeeze out these people. We saw an unprecedented surge in volume, and we saw the stock go from $20 to almost $40 a share in one day. That was a almost 100% increase. Now suddenly all eyes are on GameStop, and we're like, wow, this is getting crazy. We're starting to see these squeezes. Who's getting squeezed out here? Who's short? Well, GameStop was a very heavily shorted company. A lot of people don't believe in GameStop fundamentally. It was a $2 share company for a reason. But you have huge institutions, huge hedge funds. A lot of big corporate money was short this stock, and they're typically the largest shorters out there. And so that's why we saw this large short squeeze start to build and build and build. In fact, the short interest was well over 100% at one point, which means that those shares that were loaned and someone sold them, that share was then loaned again. And these shares were loaned out to people who thought the stock was going to go lower several times per share. And that's insane. That means that there are all of these people now who, as the stock goes higher and they start going underwater, their brokers are going to force them out, cause that avalanche of buying, and it's going to further spur demand. We eventually saw it go supernova, obviously going up to almost $500 today, and this is where things get interesting, and this is why so many people are so pissed off and incensed and are seeing how the market is going to change going forward. So there were several shorts that obviously got squeezed out from the beginning, but they're not the only ones. A financial analytics firm S3, their director of predictive analytics, said that yes, the old shorts were squeezed out, but they were seeing unprecedented new shorts come in. The higher and higher it went. People saw GME at $50, $100, $200 and thought it was going to be an easy short, and lo and behold, they continued to get squeezed out, further spurring the buying and the demand. On top of that, you had two large corporations, Melvin Capital and Citron Research. Both of these were probably the more vocal ones out there on their GME short positions, both of which got blown out of their shorts. Citron, I believe, closed with a 100% loss. Melvin Capital actually needed to receive a $2.75 billion kind of rescue capital package from Steve Cohen and Citadel. Citadel is going to be very important, and I'm going to talk about that in a moment. But we saw these people then have to bail these people out. We saw other firms start to get squeezed out. Now, the rumors is that Citadel has apparently, and a lot of other groups like this, are going to be what caused this market manipulation that I'm going to reference in a moment. There's one other thing I want to mention, and that is we also experienced a gamma squeeze. There are a lot of people out there who wanted to speculate that GME would go up, but they didn't want to buy the stock, so they bought out of the money call options. I don't want to dive into what those are, but they're cheap kind of speculative ways that you think the stock's going to go up. And these large market makers, the people who were kind of help with the ebb and flow of the securities, sold these call options to them, and now they need to protect themselves and hedge themselves in case the stock does go up, so they buy shares, further bolstering the demand, further bolstering the buying that we saw from the retailers, from the shorts getting squeezed out. Now this gamma squeeze in the market makers balancing themselves out. And yes, I'm sure there were large time institutions that were also helping squeeze out their competitors. I'm sure it happened. Now, this is not simply just related and contained to GME. It's actually spread to several stocks out there. We saw other stocks that were garbage companies in the dumpster, in the gutter, that were heavily shorted, and we saw retail traders take to those as well. AMC, the movie theaters that's pretty much going bankrupt, went from $1 a share, $2 a share to $20 a share. We saw EXPR, which was Express. They were a sub-dollar share, and they went up to 14. We saw INO go from 9 to 14 or so. We saw TR go up. We saw SRNE go up. There were all of these stocks that suddenly, now all of these kind of BS companies were getting squeezed up. All of these people were getting squeezed out as retailers came in and as people pushed the stocks higher. Here's where we started to see the craziness and the manipulation. It started slow. It started with, over the last couple of days, some trading platforms went in and out. We saw a couple of the trading platforms like E-Trade and them start to put some restrictions out there, and their connectivity suddenly, went a little wonky. Now that happens. I don't want to put my tinfoil hat on, but today we saw an unprecedented manipulation and change in the market. Trading platforms out there, most notably Robinhood, Interactive Brokers, E-Trade, a lot of those trading platforms went to their traders, the everyday trader, and said, you are not allowed to buy GME anymore. They literally stopped their users and their traders from being able to buy GME. No one was able to buy the stock anymore. There were a handful of platforms out there that still allowed it, but suddenly that put an absolute chop on this demand. It cut the demand out artificially completely, as now no one was able to buy. They could only liquidate positions. It's absolutely unfathomable that they just did this. A lot of people are saying it was the clearing firms, Apex Clearing Holdings and some of them that shut this down. I don't know, but this caused trading volume to drop 40%. We saw all of this manipulation in the back end, and it actually was rumored that Citadel reloaded their shorts and pressured Robinhood to stop the buying. We know that Citadel clears over 60% of Robinhood platforms trades. And now they had to bail out this notable short position in GME and reload their shorts. Now this is where we're starting to see the real manipulation come in, because suddenly, no one's able to buy this stock. It put an absolute grind in it, and the supply and the demand in the market has now been forcibly removed. We saw GME go from 500 to 113. KOSS went from 170 to 27. AMC went from 22 to 6.5. Yes, this probably would have happened at some point on its own, but this was manipulated. This was forced. Yes, GME should not be trading up here. The fundamentals are not there. The fundamentals are still crap. They haven't made any notable changes. But, and this is an important lesson for you new traders, the market can stay irrational longer than you can stay solvent. And the market will put fundamentals on the back seat from time to time. But in the long run, they usually return. But in this case, we saw hundreds and hundreds of people unable to suddenly buy, unable to suddenly enact trades on these platforms. And it wasn't just GME, it was AMC, it was all of them. And that suddenly killed the demand. Now, I want to give you why. Why did this happen? Why did they possibly do this? I want to go give you a little history lesson. In the late 1990s, we saw something similar-ish happen. Long-term capital management, big group, managed a whole lot of money in a whole lot of financial markets, were doing really, really well, bringing in a whole lot of returns, had all these clients. Suddenly, they imploded. They made some bad trades, and they were about to implode and have to liquidate all of their financial holdings. This would have been detrimental to the financial markets. This forced liquidation of such scale would have decimated the markets. And we saw a bailout. We saw a lot of corporations come in and step in with the Fed overseeing that. This is similar to what we just saw in the sense that there were reportedly a lot of large funds that were short GME that were now being squeezed out by these retail traders, by the gamma squeeze, by these coverings. And so now we're having a lot of large corporations apparently and hedge funds and group investors that now suddenly are underwater and need to save themselves and need to save their positions. This is why yesterday we saw a drop in the stock market. We saw a drop in stocks like Square, Roku, Target, Apple, all of these kind of fundamental stocks that a lot of these corporations held. A lot of them had to liquidate positions to put that money and protect their GME shorts or stay solvent or do whatever. And so this was already kind of starting to impact the markets. And so there are already rumors and thoughts out there, and I saw an interesting rumor from a possible Robinhood insider that said that they were getting calls from government members and higher up members in the government and Citadel, and they were getting all of this pressure to protect these large corporations. This was essentially a bailout. This was essentially bailing out these large corporations that were short this stock at the expense of the everyday trader, at the expense of the everyday average retail trader. They absolutely put an axe in the trading on this stock, and they crushed it. I'm now seeing reports on Bloomberg that Robinhood throughout this has had to draw down hundreds of millions of dollars in credit lines from creditors throughout this process over the last 2-3 days. So now we might see Robinhood implode. Who knows where that came from, what's been going on the back end, but something serious is going on, and you are going to see a lot of news probably following this in the coming days, especially if they do not reinstitute and reallow the buying of GME and AMC. What is going to happen? I don't know. Why does this matter? Because this has now rocked the foundation of the belief that the markets aren't rigged. I hate to break it to you, but they are. The house always wins. It's an incestuous group of the money, and that's just how it works. We're the small fish. And now this has been a bailout of big funds at the expense of the average retail trader, at the expense of you and me, at the expense of the day traders, the speculators, the swing traders. And now we're probably going to have Congress come in here and do what they do best, which is fuck everything up. I'm sorry, but they're going to focus on the wrong things. They're going to try to focus on the small traders. We're not going to get to see them actually put in the changes necessary, most likely. They're talking about instituting a financial tax, which could be detrimental and could decimate trading. It'll decimate day trading and swing trading and speculation. It won't hurt investments and long-term trading, but it will fundamentally alter how the market works and trades. So we have all of this potential new regulations or laws or blundering attempts at Congress to come in. Will we see the investigation that so many people are going to be calling for now? are we going to see any kind of repercussions for such blatant market manipulation and disregard for the fundamentals and the back and forth of the market? This is not a free financial market. This is very evident here that, look, I completely applaud the retail traders and the day traders that sent this higher and squeezed those fuckers out. But it is an absolute travesty that we saw that, yes, GME would eventually have come back down, but it has been manipulated down. The supply and demand has been artificially changed. And we are seeing the direct consumer who put their money in a trading account was suddenly told that they're not allowed to trade how they want. And so this is going to alter the markets. It's going to alter perceptions in the markets, and we're going to see a lot of fallout and a lot of discussions from this. I hope that this was helpful and informative. I don't want to harp on this too much, but this has been a black swan event. We're seeing a lot of craziness out there, and it's going to continue. And this wasn't just contained to GME. It's spread to other stocks, and it could continue to spread. And what's going to happen if this happens again or happens 2 more times? Who's going to step in? Are we going to allow these large corporations to get squeezed out? Time will only tell. If this was at all helpful, again, be sure to like and subscribe. Drop a comment in the video if you have any thoughts, you want your voice heard, or if you want to have us answer any questions. Reminder, we are here Monday through Friday at 1 p.m. Eastern every day on our YouTube to talk about what's going on in the market, talk about our opinions on it. I encourage you all to drop by and give us a chat. But that was Nick from Vant Trading. It's been a crazy couple of days here, and it's only going to get crazier. And we have seen some historic moments in the market. Is the free market dead? Are things going to change? Are retail traders now going to be in the driver's seat? Time will tell. But this was Nick from Vant Trading, and as always, safe trading.